Many of you guys have seen this video, and actually some of our subscribers actually sent it to me and want to know my thoughts. So instead of just texting you guys all back personally, I figured let's just do a video. Now this guy is ClearValue Tax. He's a huge YouTuber. He's really, really smart. He says a couple things that I just want to react to, because remember, real estate is local. You can't say the real estate market nationally. It has to go, you have to look at it specific for your area, just like we're going to do after we listen to a couple things from his video. So let's go ahead and see what he has to say. And there are a couple flaws in the data that he brings up. And so I'm also going to talk about that. Again, I'm not knocking him because he is smart. He hits a lot of things right on the nail, but there are a couple things that I did find that are incorrect. So
there was a housing market crash in 2008 to 2010. It was because of subprime. However, it all boils down to supply and demand, economics 101. In 2010, there were 2.9 million foreclosures in that year alone. So I want to put that into perspective for you. In the US, 5 million homes were sold last year, 5 million. So imagine what 2.9 million foreclosures in 1 year will do to supply and demand.
Something that he talks about, and same thing that Dave Ramsey talks about, is supply versus demand. So let me just hit on the supply versus demand here in the Treasure Valley. As many of you guys know, have been following our channel, we know that supply is down year over year, but our demand is also falling. And I just want to show you the stuff that we found. So I'm just going to jump into Redfin. Now, Redfin, they do a thing. It's called, if you watch our channel, you've seen this before, where they compare how many people are searching to move into an area. And so we looked at this back at the end of, I can't remember exactly when, but these stats were after the peak season in our market. Now, our market, the peak season kind of ends right in September, October. So it ramps up, and then that's when it starts going back down again. So this is after peak season. This is during a slow season that these numbers are in. So in LA, people from LA, California, looking to move here, their searches were right around 1264. So there's 1,264 people looking to move into Boise from Redfin's stats. Now, if we were to look at it now, and this is from June 2023 to August 2023. So this is during peak season, right? So the numbers that I just showed you were after peak season. So numbers are gonna go down after peak season. Now these numbers are during peak season. So June 2023 through August 2023, there was 990 people searching to move here. So there was 1/5 of the people have dropped, yet the numbers that we looked at previously were after peak season. This is during peak season. Now, San Francisco, let's look at how that looks for San Francisco. After peak season of 2022, 808 people were looking to move in here. During peak season of 2023, 577 people were looking to move into Boise area. So you can see that the demand is going down. Now, what does that look like necessarily for our housing market, the realtors report? So let's see how many homes have sold. Now, some people are going to say, well, that's because there wasn't enough inventory. But in 2022, there was a 13.8% decrease in homes or closed sales between August of 2022 to August of 2023. So almost 14% in 2021 to 2022. That was a 13% decrease. So you had 13% plus 14%. So there's 27% less homes closed than there were in 2021. And so we see that the demand is continually going down. Yes, inventory right now, inventory was up 111% this same time last year. And this time this year is 35% down. But the other thing I want to bring up is the sales price, right? So from peak to trough, if you've been following our channel, you know from the highest price point to the lowest price point was a 20% decrease from the highest median sales price to the lowest median sales price in Ada County. We're sitting right around 8%. And matter of fact, this is the lowest median sales price of this year since April. So why is that significant? Because about February, the housing market takes off, right? So about second week of January, historically, our housing market starts rising, and then it starts coming down. So from the peak of this, we've seen it go. From the peak, we've seen it come down. Now we're back to April prices of 2022, of 2023, and yet we aren't even at the slowest part of the real estate market. The slowest part is yet to come. That means October, November, December. And so there's a good chance that we're going to continue to see this drive. And I think the reason why we saw a quick uptick and now we're coming back down is because of seasonality, right? The seasonal trend. And people were cheering, saying the housing market's the bottom is over, the bottom is over. But I think we have more to come, because as the housing market, people ramp up, start buying houses, and then we're going to start seeing a trend. If you actually look here, and I think if we took a line and followed the trends, it's going to do a gradual line, because remember, the housing market is grinding here in the Boise Valley to go lower. It's not a stock. It can't just shoot up. People can't just click a button and sell their house, right? They have to wait for a buyer to come. And so there's this grinding of the median sales price going down. And so let's jump back in to see what ClearValue Tax has to say about that. And then we're going to jump back in.
If you have 2.9 million foreclosures flooding the market in 1 year, then yeah, you're going to get a housing market crash.
So one thing I want to bring up is he's using this graph. And of course, when you use this graph, it makes sense why you would think that there's not going to be this huge, massive foreclosures, because he's going back to 2008, when 2008, according to this graph, is 1.3 million homes were in foreclosure or bank repossessions or default notices. And here in 2023, there's only 186,000. But I found this graph that took us back to 2005. And what I want you guys to look at is this steep incline. So back in 2005, 2006, 2007, they were all floating right around that 100, 200,000. But then in a matter of a year, they more than doubled. They more than doubled to 500,000. And the graph that he's using was in the middle to the end of 2008. So if we just look at 2008 to now, yeah, it's like no way there's going to be this huge foreclosure. But if you look at 2005 and you see that steep incline of foreclosure notices, that is something that should be alarming. So yes, although this guy is super smart, this graph is insane when you look at it and you go back to 2005 versus just looking at the end of 2008 to now, because you see this steep incline. I mean, from 2005, if we jump all the way to the end of 2008, there was an 800% increase in foreclosures, give or take. And this really should be alarming. So yes, there are people out there saying the housing market's not going to crash. The housing market's not going to crash. The average American savings rate has continued to shrink. The debt to income for housing expenses, we're looking at 40%. It's the most unaffordable time. And so it's only a matter of time before we see a huge spike. So yes, he was right, maybe nationally, but here in the local Treasure Valley market, we're seeing something. Demand is continually going down. So make sure you're not just listening to somebody who's talking about the national, but you're going specific to an area to know how is the real estate market where you're at.